Hey traders, welcome to Charts and Coffee. Great to see everybody. Happy Wednesday. We've got a busy week ahead of us. And let's go ahead and just jump into just a quick reminder. Economic calendar, gang. If you're not making this one of the first stops in your morning, look, charts are really important. If we can build a habit of remembering the catalysts for what's going to affect our trading day, we're in good shape. So we're going to kick off the session with a look at what's going on in terms of the economic calendar. I know a lot of you right now are probably thinking, Rag, I got a hurricane breathing down my neck. And again, those of you on the West Coast here of Florida, thinking of you, been there, done that, and definitely thinking of you all. That storm is a beast. Yeah, that storm is a beast. Stay safe, stay inside. When I was in my dumber years, when I was younger, a storm meant surf's up. Yeah, so it's interesting. You fast forward, 35 years, think, oh, normally during the storm, had niece looking at the surf, doing all sorts of stupid things. And now I just want to make sure I have enough protein bars and water handy. But yeah, definitely thinking of you all. All right. So what you have here is the Forex Factory Economic Calendar. This is a great, free, awesome calendar. This is why it's awesome, gang. And just to give you a little background, I call high impact economic events, FOMC speeches, decisions, CPI, PCE, GDP, non-farm earnings. These are hot zones. What do I call them hot zones? Why did I start calling them hot zones all these years ago? I think it was in my third book, because of the color. That's why. Somebody asked me once, Rag, why do you call high impact economic events hot zones? The market's hot. And it came from this little icon on Forex Factory. Forex Factory's been around since Forex started becoming popular in the late 99, early 2000. I forget when Forex Factory went live, but they've been around for about 2 decades. And I love the way when I was trying to explain to traders, especially even myself, early on in my Forex career, knowing which events were important in countries other than the US. I knew the important US hot zones. I've been trading futures and stocks and whatnot, but I didn't know what's important in Switzerland when I would trade the franc, what's important in Germany when back when the Deutschmark was a futures contract. And so the red icon there really helps make it clear. So if you're kind of at a loss for Rug, does it matter? Does it matter that we had CB consumer confidence or here today? Do we have any red hot zones? I will disagree with Forex Factory. Anytime Powell is on the schedule, this thing is red hot. Okay. I don't care if he's crossing the street. If it's going to be broadcast somewhere, remember when Greenspan had the briefcase? It's going to be important. If you're trading crude oil inventories are going to be important. So take a look at the calendar. Make sure you're not getting broadsided by events that are likely to be psychologically impactful. Volatility, volume, and price, of course. All right, gang. So let's get to the questions as always. Great to see everyone and kicking it off. First question here. Hey there, MVC. In a nutshell, why the continuing sell-off in the markets? I could say something like what was told to me a long time ago, which is more sellers than buyers. And that's essentially true. It's really more selling pressure than buying support. Sellers are resistance, buyers are support. When we don't have as many buyers to hold a level and the sellers are able to overpower, we continue to move lower. Some of this, I have to say, is probably a little bit of a self-fulfilling prophecy. Never underestimate that if something's repeated enough, behavior does map out to that. And there's been so much talk about retesting June lows. Here we are, retesting June lows. But at the end of the day, if I want to be a little bit more tactical about why we're down here, think about what we've had to digest. The big CPI, let's go back to Jackson Hole, then the CPI, and then last week's FOMC, which really just echoed the concerns that the FOMC had and really solidified why they could be more hawkish. Every piece of good data is also going to solidify why the FOMC can be more hawkish. And that's what we're dealing with. We're dealing with good data in the midst of a rate tightening cycle, which allows the FOMC to continue on the path. So if everyone was wondering, when's the Fed U-turn? When's that FOMC pivot, right? When are they going to pivot in their messaging? When data is as strong as it is, no reason for them to pivot. So the hope of a pivot here at the June lows, a little bit less. But let's also remember, having tested June lows, we're not getting crushed through this level, at least not as of right now. Gang, the way that we want to be traders, and I know a lot of folks are asking, well, Rob, what's next? If we're going to continue lower, what's next? Well, let's squeeze in a little bit more and let's talk about the way the markets behave and the way rational traders will look at the market, which is a series of obstacles to the downside. The first obstacle was the September low. Took that out. That was a near-term low, but we took that out. The next one is the June low, which, by the way, we bounced from here before. I'm not underestimating another chance of a bounce here, gang. Macroeconomically, we don't have the same picture that we had in June when I put that July 7 light at the end of the bottom video out. We then bounced 700 S&P points. I don't know that we're in for that. But the question I keep getting is, Rob, do you still think this is a bottoming process? I actually do. And I will keep that opinion until something changes that opinion. And that means we start to establish resistance at the previous support of the June low. If that doesn't hold, we have lows back from February of 21. If that doesn't hold, I have lows back from end of December of 2020. And I'm just going to use each previous Darvis level as a step. Do we eventually hit some significant low? Do we eventually get to lows we saw back in March of 20? Yes, but it's not a straight shot. There's a lot in the way. And if there's going to be a Fed pivot, right? A pivot in messaging, watch how it's, and this is just the way technical analysis and these news tend to dovetail. It's likely going to be at one of these volume and or Darvis levels. Emphasis on volume. So for every Darvis out there, look to see if there's corresponding volume. For every Darvis out there, we have corresponding volume. Look at this kind of group of Darvi. Look at the corresponding volume. That's going to help you map where we're likely to go next and then where we could find support. In increments, gang, not, oh my gosh, we're going to March of 2020 lows. Hope that makes sense. And that's my analysis in a nutshell. I'll trade what I see. By the way, yesterday, and back at the Simpler Trading YouTube channel, I posted probably my favorite title of the year. Maybe a light at the end of the bottom. I really like that because it set up a 700-point S&P rally. But world's most boring day trader. That's me. World's most boring day trading. That's what I seek to find. And if you're curious, okay, Rog, but how are you day trading and how are you making these decisions? Check out yesterday's free video right back at the Simpler Trading YouTube channel, and you'll see exactly what I do every day. This is rinse and repeat, gang. This is the template. This video is the template for the world's most boring day trading. And for those of you that understand the power of boring, you'll know exactly why I use that word. So thank you for the question, MVC. Hey there, Alex. Good morning. Ultimate short opportunity or time to cover October and November puts. Craziness with the Bank of England. All right. So where are you looking, right? That's always the question I'm going to ask myself. Is the NASDAQ and the S&P, are we looking at fresh downtrends? That would be a yes, we are looking at fresh downtrends. And then I look at, and I'm looking at my other screens here, I look at 6B, which is an unbelievable downtrend. 6B, 6E, these are setups we talked about in the futures room. Gang, I think a lot of times futures traders tend to reduce futures trading to just day trading. Just day trade the S&P. And that's wonderful. In fact, I do that every morning, most intensely between 9:30 and 10:35 Eastern. However, there are, to your point, and thank you for the question, Alex, there are amazing opportunities in taking advantage of trends. The 6B has been in a downtrend since the beginning of March, really middle of March, if you want to be a little bit more conservative. And the fact that we have not even gotten to the mean is not bullish, right? Wandering far away from the mean in and of itself is not a reason to think we're going to snap back. And that's a very different perspective of standard deviation when you think about volume. Think about these tools like support and resistance. We have a tremendous amount of resistance at the -1 standard deviation. I'm looking at, yeah, if you take a look at the 6B and the downtrend that we continue to see in the 6B, a tremendous amount of resistance at that -1 standard deviation. And as long as that continues to be in play and we have the red structure, notice I'm not separating volume from market structure. It actually just gives us a much more fuller picture when we can factor in price, volume, volatility, and time. And I would continue to be bearish on the pound. I'm actually still quite bearish on the euro, but not to the degree that I was bearish earlier this year. The dollar strength is in many ways being driven by yen weakness, pound weakness, euro weakness. I do believe, and we have an open position, right? So while I might think, let's not have the same ambitions for dollar longs or euro shorts as we had earlier this year when we had the US ramping up hawkish talk. But let's also remember that we want to not try to pick a bottom either. So this is why we're short the euro via long puts and FXE. Long puts FXB make perfect sense. 6B shorts make perfect sense. Now, when it comes to the S&P, gang, the main reason that we're going to finally pivot in terms of trend and or Federal Reserve, the trend is going to pivot when we reach levels of volume. And we're going to reach levels of volume when the FOMC target rate probability conversation and discounting are stable. They're steady. We don't get increases in the target rate probability. That's one situation. The other situation is the data starts to look bad. Jobs, GDP so jobs weakening, GDP weakening, and or inflation ticking lower. Those would be things that would get the Fed to begin to embrace a pivot. So it's going to be data driven. When they say we're data driven, it's not untrue. It is true. But their idea of what important data is and the thresholds of that important data are probably very different than ours, right? Than ours here in the world of the real, right? Blue pill versus red pill. We know which one they took. So that is the management there. All right. Next up, Nick L asks why, and thank you, Alex, for your question. Nick asks, why is the euro in such a big downtrend and what's going on? So yeah, Nick, great follow-up to Alex's question. What's it going to take to turn around? I'll be straight up, Nick. I hope it doesn't. We're long puts in FXE. We're short 6E, short 6B if you're in the futures version of that trade. What's it going to take? Same scenario. A pivot from the Federal Reserve. But remember, that would only affect the dollar itself. As long as pound is weak, yen is weak, and euro is weak, dollar can continue to rally. It's not because we have increased hawkishness from the US. It's because we continue to have a weak opinion of those other three currencies. Remember, anytime we're trading the dollar or the euro, we have to talk about the basket because the dollar index basket, it's not the dollar index, it's the basket against 6 other currencies. So thanks for the question. Hey there, Karthik, mostly neutral, double red markets. Am I taking any swing type positions or just day trading? Karthik, world's most boring day trader talks about, and thank you for the question. Sanity right now is in the short term. Sanity right now is in the short term or the very long term. So if I'm not finding trades on a 5-minute time frame, I'm looking at the weekly. It's just really that simple. Ultimately, what I want to remember is that it really is going to depend on risk tolerance and whether or not you have a priority for wanting to grow the portfolio that you're managing in an environment where things are quote unquote on sale. Remember the old saying, and it's so true, Wall Street's the only place they throw a sale and nobody comes. And what's on sale? Downtrends are not sales, gang. Neutral markets at support are on sale. Downtrends are weakness, and we're going to wait for the neutral market to typically start to show up again. So I think about what's on sale longer term. But am I day trading right now, Karthik? I'd say, I'd tell you probably 80%, 85%, maybe close to 90 of my activity since mid-June has been not only day trading, but day trading specifically the hour between hour and 5 minutes, between 9:30 and 10:35, and maybe going into the 11:30 cutoff that I have for the morning for the AM day trading session. We have a handful of setups that we've been in and out of, but the most productive part of my book, the most productive activity that I've engaged in since summer has been the short term. And so I'm always going to talk about what's working now. And that's what's working. That's why so many of the free videos are covering what's going on the short-term time frame. So thank you for the question. All right, lots of questions on the dollar. So Janet, thank you. I think Nick's question and Alex's question, I hopefully filled in the gaps there. Maruf, how do I interpret BOE? I'm going to look at the chart. Same idea as Alex and those earlier questions. I love the questions on the currencies and looking globally. That's awesome, gang. Thank you. Same answer for those questions. Nikolai asked, is ZB catching a bid? Gang, remember, the long bond is absolutely in a downtrend, and it has been clearly since the first week, second week of September. Established downtrend. It is set, right? It is set. Bouncing a little bit today. Look, on the daily time frame of the bond market, it's a short the rip, gang. But so much of analysis is only initially about the symbol that we're trading. It's far more important the time frame that we're trading it on in our time horizon. Yesterday, hey, Bob, was that our biggest trade yesterday? Was that our biggest trade, the bond day trade? We shorted the bond yesterday. We had a beautiful breach retreat, hourly price movement range. I don't know that can I show it to you here? We had a beautiful breach retreat set up. Yeah, right up in here. We had a beautiful test of the HPMR, hourly price movement range red zone. And that was probably our biggest trade yesterday. And then we're flat. So we get to think about, all right, what's next? Right? What's next today? Do I get another short opportunity? Is it going to be a long opportunity? That's what's so great about day trading. We'll look at the structure today. We'll look at the setups for today and go forward. So yeah, if we're catching a bid, maybe we're going to be long bonds today versus short. And that's the great thing. For a day trader, the freedom is being flat by a certain part of the day. The freedom is starting with an open mind, no positions, and fresh eyes every morning. And then as we have this vacillation back and forth, we're not stuck in that, it feels like being in the washing machine and just being in that agitating mode, right? That's what it feels like if we don't have that more nimble approach. And that's why I love for all my traders, swing traders on the daily, weekly position traders, to also have a gear they can shift into that is the short-term time frame. World's most boring day trader, gang. Check out that video. Template is laid out there. All right, next up, seems short the rip. Hey there, Ravi. Seems short the rip to work most days. Is it really that simple? In a downtrend? Yeah. In a downtrend, I would say yes. In a downtrend, just like buy the dip is valid in an uptrend, short the rip is valid in a downtrend, intraday, end of day. However, I will say this. Equities especially have a bullish bias. They are designed and they are most efficiently always going to move over a span of time to the upside. So short squeezes in downtrends are far more violent usually than pullbacks, retracements, regressions to the mean in an uptrend. So as long as you can handle the greater volatility of a downtrend, it's more or less the same thing. Buy the dip on the way up, short the rip on the way down. All right, gang, as always, thank you so much for being here for Charts and Coffee. Folks, I'm getting another band of rain coming through. Folks on the West Coast, stay safe. And everyone else, have a great day. Check the calendar. I'll see you tomorrow. Same time, same station. My Sector Secrets Mastery, folks, we've got our double header coming up. First hour of day trading, second hour of swing trading. I'll see you in the room in just a moment. All right, gang. Until then,